Starting with the Conservatives and MP Scheer, please, for 5 minutes.
Thanks very much. Thanks very much for coming. In the previous few years, the Bank of Canada purchased hundreds of billions of dollars of government bonds at what were then low interest rates. And now interest rates have gone up. In your previous appearance before the committee, we talked about how that would put the Bank of Canada itself in a deficit position, as it has to pay out more in interest than it receives on those bonds as those interest rates have gone up. Can you update the committee as to the budgetary position of the Bank of Canada in terms of a surplus or deficit based on those bond holdings?
Yes, I think the Senior Deputy Governor's got the numbers right in front of her, so I'll turn it to her.
So you're looking for a bottom line losses? Is that what you're asking?
How much are taxpayers on the hook for the losses at the Bank of Canada?
Our losses or our profits always roll up into the government's overall financial situation. Our losses are very much contingent on the path for interest rates, I think, as you know. So, I mean, we are estimating probably somewhere in the range of ultimately $6 billion at the end. So, as I said, very much contingent on interest rates. We do have legislation that's been passed now that lets us retain our earnings. Normally, at the end of every year, we would have remitted whatever our earnings were to the government, and once the assets that you described roll off our balance sheets, we will be back in positive earnings, and that will fill that sort of overall loss, and then we'll be back to remitting to government. We expect to be back in a positive situation in about 2 years, and then we would continue remitting back to government.
So just to clarify, you say it was a $6 billion loss? Total.
Yeah.
So the Bank of Canada is losing $6 billion. Your point about rolling that into taking advantage of the new legislation that allows you to retain earnings, it still does have the effect that the bank will not be remitting, I guess, dividends, for lack of a better word, to the government. So that there still is a cost to the taxpayer.
Yeah, on a temporary basis. I mean, prior to the quantitative easing, we would turn about a $2 billion surplus a year over to government, and we will get back there eventually. So, but there's a temporary period of time where we have losses that will roll up, and we expect to be back to remitting to the government in a positive situation.
Okay. So I guess if you normally remitted about $2 billion a year and you're going to lose $6 billion this year, that's an $8 billion swing.
That was a total, but yeah, sure, yeah.
Yeah. And if interest rates stay high, it could keep the bank in a deficit position for longer?
Yeah, as I said, the loss is always an estimate because it's based on the yield on our bond portfolio, so it's a bit sensitive to interest rates.
That portfolio is government bonds?
Yes, yeah. Primarily.
Not much of a portfolio in the traditional sense. It's just one kind of holding. It's one type of holding. One
issuer, yeah.
Yeah. And if interest rates go up, do you have a contingency plan? Have you done any estimations if you do have to raise interest rates, what that might do to your bond holdings and the deficit position?
I mean, we run a sensitivity analysis regularly. So our finance team is quite separate from our policy setting team. Will, like any organization, will run a sensitivity analysis on our portfolio.
Okay, thanks very much for that explanation. Mr. Macklem, you've talked before about government economic policy or fiscal policy, I think you call it, going at cross purposes on monetary policy. We've seen in the last few months of the year where the government's deficits over the last couple of years, the deficits have been much higher as the year closes out than originally anticipated. If that happens again, what impact will that have on your ability to lower interest rates in the short or medium term?
Well, I can't really add much more than what I've already said. I think we've built the government's spending plans into our forecast. If governments at all levels, federal, provincial, municipal, if they add a lot more spending relative to what we've built in, yes, that is going to make it harder to get inflation back down.
Yeah.